Welcome to the AI First Business Podcast with Tina Yazdi, where we show you how companies, teams, and leaders are turning AI hype into ROI.
Tyler, welcome to the podcast.
Thank you. It's great to be joining you.
Give us a short introduction. Who is Tyler?
I'm a partner at Menlo Ventures. I rejoined the firm about 8 years ago, or I'd say, 8 years ago now. And previously, I was at Excel Partners in London. And prior to that, I was actually at Menlo for my first job out of college. So I call it the Menlo sandwich or the Excel sandwich, but I've been in venture capital my entire career, which is now spanning about 15 years. For Menlo, I do a lot of our FinTech initiatives and sort of our initiatives in sort of vertical SaaS and the intersection between FinTech and software.
Okay, so can you, before we dive into some of the detail and the background that you have working with the GoCardless founders back in the day, I want to learn a little bit more about you and what you do at Menlo. So can you tell us a little bit more about the work that you do?
Yeah, certainly. So as a partner at Menlo, I spend a lot of my time doing investments or basically researching areas where I have investment theses and trying to find companies that, sort of fit my eye in terms of their founding teams, their products, their business momentum, and lean into those. We're active investors at Menlo, so we try to find companies at the early stage or what we call the inflection stage, which is sort of venture growth. To be more specific, I'd say that's companies anywhere from seed or, kind of inception all the way to companies around, 7 to 10 million of ARR. And so I probably, at this part of my career, I lean more to the inflection side. So I look for companies that have a little bit of early product market fit. Usually they've raised a Series A and they're trending towards 2 to 5 million of run rate. And I like to spend a lot of time with these companies prior to investing, building a longitudinal relationship that can sometimes span several years before we actually pull an investment. So that's what I do. And then when we invest, I get heavily involved in these companies. I join the board, and then we have a team within Menlo called our Fuel team, where we really try to help these companies in areas like org design, hiring at the executive level, and some go-to-market initiatives. So that's a little bit about my day to day. It's I love my job, and it's exciting times.
Awesome. And you tend to invest in what you've coined layer cakes. Can you tell us a little bit more about that?
Yeah. So you can think about layer cakes maybe on two different dimensions. So number one, I kind of distill things down to like the first principles of building enduring businesses, and I think one of the most important things in terms of creating a margin of safety or creating the odds of an enduring business is finding companies that have mechanisms to monetize their customers over very long periods of time, to basically retain and monetize those customers. And when you look at companies that successfully do that, they have these cohorts that basically are very flat. They sort of, you generate $100 of revenue in, let's say, period 1, and in period 30 you're generating maybe $150 or $160 revenue, and when you stack those together they look like a beautiful layer cake. And so we actually, I think, coined that term. I sort of saw that. I'm sort of a very visual person. I remember stacking kind of the early cohorts of GoCardless and sort of seeing that there was this layer cake type visual in their business, and really liking that just because it's memorable. There's another way to think about layer cakes too, which is that once you've acquired a customer, a lot of successful businesses increase those layer cakes by adding on new products and services that they can sell to that existing customer. So you might start with payments, and then perhaps because you do payments, you have better insight into a company's cash flows. You can, in theory, offer them a lending product, for instance. And so I think a lot of successful companies figure out how to expand value with an account by innovating quickly on products and services that tie naturally into the initial product that they've landed with a customer.
Where have you seen that work best? Have you added a particular investment that you're most proud of that fits that kind of that layer cake category?
Yeah, I mean, at this point in time, like I almost exclusively look for companies that can acquire and maintain their customers for what feels like forever. I mean, it's not that, but it feels that way. I'd say in the Menlo portfolio, a company like Carta is sort of an iconic company when it comes to both vectors of layer cakes. I mean, Carta's, the system of record for cap table management. Companies adopt the platform, it becomes pretty mission critical. And as companies grow, the value of the cap table grows. So Carta gets paid more money over time for managing that. But then there's just a lot, that's kind of the sort of atomic unit of value in that ecosystem. And from there, you can provide a lot of other products and services to further monetize that customer, or monetize that customer through interactions with other counterparties. So for instance, there's 409A valuations. Well, because Carta owns the cap table, they're, in pole position to do 409As in a more automated way. And so adding that to the service has been very successful. And so that's that layer cake of product addition. There's also compensation, which has been a very successful launch for Carta, in the last year or so. And they have, again, primary data on what equity compensation is within these companies. And so that's like, a competitive advantage for them and something they can sell back to their customer base. And then lastly, you have things like Carta X and fund administration. These are all things that sort of counterparties want, like funds want, or people who want to buy secondaries. And Carta can administer all of these in a much more seamless way because, again, they own the system of record, which is equity ownership. And so that's, I think, a prime example of a layer cake business. It's also a business called a trifecta business, which I can talk about later. But I'd say GoCardless is a classic example of a layer cake business too, just in terms of how they retain and monetize their customers over time. And more generally, I'd say that payments businesses have become so valuable across the world because they generally have layer cake or annuity-like characteristics that make them very efficient at compounding for long periods of time.
When you looked at GoCardless, did they fit in this category? And if so, how?
I think GoCardless was exciting because I think we had a hypothesis that they would fit in this category. And the very early customer data suggested that they would have very strong customer annuities. What was exciting about GoCardless and what I'm proud of is that we saw the opportunity very early on. I mean, I think by way of background, I first encountered GoCardless at a dinner. I was at a dinner that was hosted by Caroline Sage. She has basically a recruiting consultancy business in the UK. She actually recruited me to Excel, and she had hosted a dinner, probably a few months after I joined. And Tom Blomfeld was at that dinner with a few other entrepreneurs. And, we just started chatting. And at the time, he had an idea for some other kind of consumer finance business that I recall I don't think was particularly interesting, but this
was group pay, I think.
Yeah, I think it was group pay. And we just felt like that's a very hard business to scale, and questioned whether there was going to be a strong kind of beachhead of customers who would want that product. But I was quite enamored with just how he thought about the world. I mean, he's a really, really smart, charming guy, really understands technology and products. And so we stayed in touch, and he sort of iterated his focus away from group payments. I think through group payments, I think he saw some of the issues with the direct debit system in the UK. And he saw that it was a very powerful payment rail and that it's quite low cost, but it was inaccessible to many people who would benefit from it because it didn't have sort of a developer-centric or developer-friendly wrapper. And so at the time, direct debit, like most payment rails, were internalized by banks, and very large customers who wanted to work directly with banks, maybe like utility companies, could access it, but no one else. And so when he had stumbled on that insight that, hey, maybe there was some value around creating an API to abstract the complexities of the direct debit rail, that's when we got quite interested, just because we knew that payments was an unsolved problem, especially if you wanted to do non-card payments. And a lot of businesses want to do non-card payments because interchange is quite expensive. And so if you could figure out how to unleash the availability of direct debit and improve some of its sort of functional deficiencies, you could create a wonderful utility that businesses would want to use. And so we were drawn to that. And I think, Stripe and others had been in the market doing payment processing on the card side for some time. And I think we just had the intuition that if you could build a developer-centric platform, customers who would come to you would probably integrate and then consume the product for as long as they were in business, because payments is one of these fundamental things where if you're in business, you're collecting payments, and therefore there's no reason to churn off of a really well-designed product that's mission critical to your success.
And I believe that over time, your opinion of GoCardless did change, right? So you obviously had this meeting with Tom, you were really impressed. And at that point, did you decide to invest? Or
Well, I think originally we heard about Group Pay, or I heard about Group Pay from Tom. And then he, I think, reached back out to me. I don't remember how we got back in touch a couple of months later, but we reconnected. That's when I believe I also met, his co-founders, Hiroki and Matt. And there was just a lot more momentum at the time. Again, the concept had changed. He went from this sort of application layer problem of trying to solve group payments to more of an infrastructure problem of trying to, again, improve the availability of direct debit and democratize sort of lower cost bank payments. That coupled with just seeing his founding team, Hiroki and Matt alongside him, really energized us. I mean, these guys together, they were so smart and charming and driven to do this. And I felt a little bit kind of insane. You're like, hey, how do you get access to direct debit? Like, what bank is going to work with you? What type of customers are we going to address? But it just seemed like a really powerful mechanism. And these guys just felt like they had the technical abilities and sort of that, for lack of a better word, charisma to go get some of these early partnerships done where they could launch a product. And so we met with them a couple times. That's, I introduced the GoCardless team, the founding team. So Tom, Hiroki, and Matt to my colleague, Adam Valkin, who was with me at Excel at that time. And we spent probably a couple months getting to know them, sort of better understanding their business. I think they had launched the product. They had sort of figured out the RBC relationship and had launched like early on. And then they went to YC. And so we sort of tracked them through YC. And I think they learned a lot more just about how to growth hack within YC, came back with even more sort of momentum. I recall actually visiting them in California while they were at YC. So we were really tracking them quite closely. And I think we just wanted to see that they could sort of, my term is sort of get water running through the pipes. It was like, hey, can you stand up the platform? It doesn't mean you need to have a growing amount of payment volume, but we want to see that like the API works, that you can actually get RBC or RBS to partner with you. And they were able to do that, I guess, over that YC summer. And so we ended up leading their seed round, I believe, with Passion Capital shortly thereafter. And then they were off to the races.
Nice. Okay, so you guys funded their seed round. How much was that seed round?
It's in Crunchbase. I mean, this is when, I don't know, this was probably, I think we invested somewhere between 2 and 2.5 million. Look, times have changed dramatically. I think for FinTech infrastructure businesses today, with a founding team like that, they would probably raise a lot more money at a much higher valuation. But 2012, and so I do believe it was around a $2.5 million round. It felt like probably a mutually painful price, where it probably for them felt like it was a decent amount of dilution. For us, it felt like it was not enough ownership for the sort of kind of time and risk. But it was sort of like, those were how the market terms were back then.
And so every round after that, they raise money almost every year since 2011, skip a few years maybe in between. How did your opinion of GoCardless change, if at all?
Yeah, early on, I think the product for GoCardless was always something that they excelled at. They were able to sort of launch this mechanism. It worked. And the question was, how do you go about scaling payment volume? Especially when you think about direct debits, like the powerful thing about it is that it's very low cost. The downside to that, if you're a business, is like, well, you need, for lack of better words, shitloads of volume to build a substantial business. When you think about volume ultimately converting into contribution margin for a business. And I think in the early days, you had 3 very smart sort of young university grads who were probably more product centric in their approach, trying to figure out how to sort of get a go-to-market motion working. And that was probably the hardest piece of the business early on, where it required the most amount of just like trial and error, and where I'd say there was not necessarily as much of a natural founder market fit for figuring those things out. And I would say that's probably the case for most companies, where you have very younger product centric founders who have this great idea for a product, don't necessarily know who the end customer is, don't have formal training in sales or go to market, product led growth or marketing or customer segmentation. And so these are all things that needed to be, learned. And there's just a natural learning curve. There's also just a natural, I'd say, progression of a company with regards to bringing in people who have sufficient domain expertise, to help kind of accelerate some of these initiatives. And so I'd say in the early days, like, it was a company that kind of just grew at a decent rate, but I think it primarily grew because existing customers, once they landed, would grow substantially. But new customers were always a little bit harder to come by, and it wasn't predictable as to like how, when we would acquire customers, how large those customers could be. And if you were to think about a sales machine or a go-to-market machine from an investment perspective, like if you were to put $1 in, exactly when is that dollar going to come out, and how do we, get precision around forecasting? And obviously, at the seed stage, this is not something that you would expect the company to fully understand. No, but I would say that over time, I think that's probably been the sort of, if I were to look at GoCardless as a business, as I mentioned earlier or previously, it's always benefited from the tailwinds of having these layer cakes, where once they acquired customers, these customers just grew on their own. And so even if there was this, I wouldn't necessarily call it struggle, but discovery to figure out how to scale a go-to-market motion, you had these embedded tailwinds of existing customer growth within your base that would drive decent growth or compounding growth for a long period of time. And so GoCardless has never been a company that's grown at like several 100% a year. That's just not the case. But it has been a company that's just sort of every single year has a very repeatable growth rate from its existing book, and then is always trying to refine ways to accelerate growth and tap into new markets, whether it's international or whether it's enterprise. That's always been the area where I think there's been more need for professionalization, optimization, etc.
Do you think is go-to-market a specific thing you look at when a startup or a scale-up comes to you? Do you look at their go-to-market strategy, or are you mostly looking at their product? Or is it even dependent on the stage that the company comes to you at?
I suspect it's really dependent on the stage. I think a lot of companies built these days are, when you think about maybe the prototypical early stage, like Series seed company built in the Valley today, often it is, people who are within larger organizations. They have a problem within that organization and try to solve it for themselves and decide that that problem is large and relatively universal. And so they say, hey, I'm going to go build a business and solve this. And that's pretty compelling because the insights into the problem existing, knowing that the problem is universal and knowing that person is probably great at building a product to solve that problem gives you some degree of confidence that, hey, they will build a great product, and B, that there's probably some amount of demand in the market to kind of go from 0 to 1. Now, the question of how much can you charge for it? Is there how are you going to generate demand? How are you going to generate leads? Is there any sort of network effects? Is there product-led growth? Those are all things that I think you discover over time just from the product being in the market and from experimentation. But I'd say that's the way that you look at it. If you look at GoCardless, there's obviously demand. There were companies using direct debit as a mechanism, and banks obviously use direct debit. But the question was, if you could make it more developer friendly, would other companies that had never used direct debit before adopt it over whatever existing means they had to collect payments? And that was sort of the bet. And that, I think, required a certain amount of education. You had to figure out how to embed direct debit into other systems, for instance, accounting systems. That's become a very important area where GoCardless has gotten a lot of traction. It's like, hey, I'm a small business. I use Intact or, whatever, QuickBooks. Having that integration so that payments flow in, are reconciled, is a very important sort of piece of the value proposition. And, that's one area where GoCardless has had a lot of, I'd call it, scaling leverage.
And when you first met the founders, you mentioned some various kind of character traits that you kind of saw in those individuals. And obviously, they didn't have the experience of working in a big company, etc. Is there anything you look at in people that are inexperienced, people that have just come out of university? You talked about charisma and also kind of a wanting to do it, having a conviction behind what they're doing. Is there anything you look at in particular when the person doesn't have the experience? And to that point, was there anything that actually stood out from their perspective?
It's a great question. I would say direct debits is a complicated problem. And I think what really excited us was their ability they had enough exposure to sort of developer ecosystems. And I'm not exactly sure how that came to be in their DNA, but clearly they had an ethos for hey, this is what developers want. This is we want to build an API business. We love the idea of distribution through API services. On the other side of that, their ability to articulate the problems within the direct debit system and I think their ability to work as a team to sort of solve like some of their immediate problems. Like I think Tom probably had like the product architecture. He was the one who was probably the most focused on like, hey, this is how we build this amazing API to sort of, again, sort of abstract some of the complexities of direct debit. Hiroki is this brilliant mathematician who's like, just, I think, very even keeled. And he complemented some of like Tom's creativity quite well. And then you had Matt, who's just like got a tremendous amount of grit and I'd say common sense. And I think he was able to also just like make sure that the trains were sort of like getting to the station on time. And so you had these three people who were all young, but they had personalities and I think strengths and weaknesses that at the time for a founding team really complemented each other. And I think that's what we found to be quite attractive, even though I'd say in terms of like real world experience of building companies, they had zero experience, right? And I think the bet was that they, being smart people with enough, I'd call it enough introspection or ability to sort of look internal, understand what they could and could not do, could figure out how to grow a business and build a culture and bring in people to supplement them in areas where they were, going to be deficient over time.
Now, kind of moving a little bit on into their kind of personalities. And one of the things that I heard from one of the early employees at GoCardless was there were some stories around drinking games or something similar to that you can probably tell me about. Is that something we can dive into?
I honestly don't remember much of the drinking games. I mean, these guys are like, they're like university UK or English university blokes is the best way to describe. I'm American. Like I'm not like close enough to like their culture in that regard. I would say they were fun guys. We had one very memorable night out where they took me to like an ancient pub somewhere in, I don't know if it was near Covent Garden or somewhere along those lines. It was like this beautiful old pub. I wish I remember the name of it. And I think it was after we had raised the Series Seed, or maybe they had sort of gotten the product in production. It was some milestone, and we had several pints amongst each other, and it was just a great time. I don't recall there being specifically drinking games, except for encouraging maybe me to make a little bit of a fool of myself, and I was happy to like to do that for them. I think I recall getting wet. I feel like there was sort of like stale beer on me at some point, but I don't recall there being specific games. But my memory.
Over the years, you must have had a lot of interactions with the GoCardless founders and the early employees, etc. Because a lot of them, of course, have now gone on to create their own companies, right? And I'm not sure if you're invested in any of these, but you've got Steve that's founded Duffel. You've also got Gray and team who have founded Dependabot that sold off to GitHub. Was there anything that really stood out to you in that culture as you got to learn about these early teams?
Yeah, I think so. Again, coming back to like what did these guys? They're exceptionally smart, and they're really all extremely. You spend time with them, I think they're all amazing human beings, and therefore they were talent magnets. Like when they recruited people, when you think about sort of recruiting for certain types of companies, there's this sort of, maybe it's a matrix, maybe call it like diverging philosophies. The question is always, do you recruit really bright, horizontally younger people who have a bunch of horizontal skill sets and who can ideally learn quickly, and they're typically younger and out of consulting or out of college? Or do you recruit people who have domain expertise and ideally they have the horsepower to fit kind of the culture of an organization that's run by really young, smart people who are by definition less experienced? And I think there's actually this natural tension, and companies probably adopt one preference over another, and maybe they evolve over time. I'd say that the GoCardless team early on, they indexed to, hey, let's go find like the smartest people that we know from university to come solve problems with us. And that they index to like difficult problems, even if there's domain expertise that maybe can help solve these problems, we're going to apply just a really smart generalist to figure these things out. And so when you think about people like Gray, that was a product of that mindset and their ability to recruit really smart people to the organization. I think that's just a talent that amazing founders have, especially in this environment, but even back then. You have to be a talent suck. You got to get people who are amazing at what they do, who often have high opportunity costs to say, fuck it, I'm going to come work with this team. And so they were good at that. Where they were probably less good, and this is the like even today when I deal with companies, it's sort of this principle of, okay, you want to have really smart people who have, we'll call it first principles when it comes to solving any problem, right? You don't, and then at the same time, the idea of experience, hey, this wheel has been created 1,000 times at 1,000 different companies. You don't necessarily have to build it from scratch is sort of the other vector, right? And I think the best people that you can hire are the ones who have seen some experience, right? They have some, they've real world sort of like Monte Carlo simulations that they've run and seen the outcomes of, but they also have the first principles to say, okay, this is how we did it at this previous company. It worked like this and it worked like this. I would suggest we try this. However, I understand the nuances of our business are different than what we had at my previous business. And so we have to think about these things. And if it's not working, we have to make adjustments. That's probably that midline that you'd ideally get to. I think companies often, when they make mistakes, they overshoot on either hiring generalists who are really smart, but never kind of like grok the blocking and tackling the basics of these issues, which are often relatively simple. And on the other side, you hire people who are sort of careerists in functions, but they never really sort of built first principles around why those functions exist as they exist, right? And therefore maybe like they're just not necessarily transferable to a new situation or a new company. That's kind of the way I would describe the general ethos of company building from a talent perspective. GoCardless was clearly on the kind of, hey, let's hire really smart people side. And a lot of those smart people are going to end up, if I were to sort of probabilistically bet, it's smart people within organizations who have more of a horizontal skill set who end up launching companies in the future. And that's why they have this mafia that they do.
Yeah, I really find it interesting when you look at each one of them. They all had the opportunity to be at very large management consultancies or investment banks, and that's where they came from. And the opportunity cost was high, yet they still made the move over. But in the long term, they've all gone on to found their own companies that have been hugely successful as well. So the final question from me is going to be, is there anything you think that would be worth learning from the GoCardless journey from a fundraising perspective or a VC relationship perspective?
GoCardless today, if you look at it, I don't know what its valuation, it's quite high. It's actually a very large business. It's not easy. It sort of looks like tremendous success, and it is, but it's taken 10 years. You had 3 founders who started the company. Today, Hiroki's the only founder who's still with the company. I mean, Tom left the business relatively early on. I was still at Excel when Tom departed. Hiroki and Matt worked together for quite some time through kind of the series sort of B stage. And, obviously there's been several rounds of financing since. There's been just a lot of people who have come and gone from the company. I'd say it's just, these things take a tremendous amount of grit. You can't underestimate just how success comes just from making sure that you continue to have this compounding motion over a long period of time. Things will typically work out, but I don't think it's ever been just easy. I think there's always been, even for a team with this talent, there were high times and there were low times. I mean, there's just been a lot of change. And so no overnight success. Payment businesses generally, especially if you have very low contribution margins because you're really focused on a low cost bank rail, need a tremendous amount of volume, and you can get there, but it could take years. And so what's nice is I think there's a real enduring business because you're the low cost provider in a category that I think is growing quite quickly. But that's my general view of the company. In terms of what can I give advice to founders? Founders come to me and I sort of say, I call balls and strikes. Like they're either people I want to work with or they're people I'm not. I think having a really strong understanding of a problem and having demonstrated ability to build product are the two things I think matter most at the early stage. And if you have those two, I think the go-to-market side, which is sort of the area that was probably the most difficult for GoCardless to figure out, will eventually come.
Thank you, Tyler. I really appreciate your time on the podcast. It's been really insightful. Thank you for your insights into GoCardless, but also some of the insights that you've had into kind of the VC world, the investments that you've made, and your investment mantra.
Absolutely. It was a pleasure. I appreciate you reaching out.
Thanks for listening. If you've gained value from this episode, please drop us a 5-star rating on Spotify or a like on YouTube. See you for the next one.